I grew up in a small town in France, in the countryside of France, in the 80s, and I was raised by two very hard-working, middle-class health professionals, my parents. And basically the value we were brought in were hard work, dedication, keeping your word, and being, the best at what you were doing. I saw my parents working a lot, okay? We're having I would say, a good life, a comfortable life, but I didn't see them very, very often. In the late 90s, I was early teenager, we watched together, I think it was on M6, we watched together a documentary about George Soros. And in the early 90s, George Soros is notoriously famous to have broken the Bank of England through one of his famous trade when he bet against the British pound. At the time, Great Britain was supposed to join the European Union project and the monetary, the common currency, and they were supposed to maintain some sort of parity of their currency, and they didn't for various reasons. And George Soros anticipated that and bet against the British pound. And even the Bank of England on the open market trying to buy as much pound as they could to maintain the parity could not prevent the devaluation of the British pound. He made close to $1 billion in 3 weeks in a trade of, I think, 3 weeks a month. I'm watching these documentaries. I'm 9 years old, and I'm turning to my mom, and I'm asking her, how did this guy do it? I mean, what does he know? What did he use in order to be able to achieve that? I mean, he doesn't have big industries. I mean, it is not, the heir of some, oil company or some manufacturing or import-export or chain of hospital. Nothing. This guy is sitting in an office, and he has some screens, he has a team, and he was able to leverage. That's the key word. He was able to leverage his resources and knowledge of the situation in order to yield an extravagant amount of money. So the question an 8-year-old guy is asking his mom is, how do I do it? Okay, what is the path for me in order to become like this guy? And not only about the money in itself, but to decorrelate the time and the effort, the energy you're putting into something that yield huge return. And that's the key word, leverage. My parents turn to me and say, well, he's a finance guy. That's the first time I heard about finance. He's a finance guy, and we don't know exactly what he did to reach there, but he probably must have been a great student. So coming back to the paradigm of hard working and studies, I decided to follow their advice and to be a good student following the great French school system. So I did classe préparatoire after my high school, classe préparatoire in Paris. Then I joined Neoma. It was in 2005 until 2009. After that, I did a second master's in the United Kingdom at the University of Durham. And at the same time, I was pursuing my CFA. And I started working for a small investment firm in London. It was an unpaid internship, which was kind of hard when you live in London. But it was a great experience. It was a great experience because it made me realize this is not the life that I want. I don't understand why, after having followed every step of the way of the playbook, good student, diploma, business school, second master's, internship, I'm finding myself in a situation where I'm living in a small closet in London, okay, not making any money, still relying on my parents, hardworking parents, again and again, in order to fund my dream and aspiration. So I was thinking there is something wrong that I'm doing. There's something that I'm missing again. So what is it? I started At the time, it was in, let me put a time frame for you guys. It was in 2009, 2010. So I'm thinking, okay, let me try to have some jobs on the side, okay, during my master's, and during that first internship, and I started to trade as well, taking a bit of capital, and thinking, okay, I'm a CFA guy, okay, I'm a finance guy, I like finance since I'm 8 years old, I understand financial markets, now it's time to make it into practice, okay? But it was a huge failure. It was a huge failure. I realized that I wanted to venture into a world where I wasn't able to make even a few $100s in a consistent manner. I was making 100, losing 50, losing 80, making 10. I'm thinking, how can we actually make a living from that? And it's gut-wrenching. So I'm thinking, again, there is something wrong, and I need to sit and understand what's happening. And then I realized the most important thing. I didn't have a mentor. I didn't have someone to actually teach me from the inside what is it the world of finance, the world of investment, and how do we actually make it work and understand the inner principle, not from a book, but from real professionals. So I decided to take things into my own hands, and at the time, LinkedIn wasn't as mainly used as it is today. So few people weren't there, most of the people weren't there, or the profile wasn't really updated. It wasn't the vibrant social media that it is today. So what I did is I Googled every major financial conferences in main financial centers. London, Hong Kong, Singapore, New York, Paris, and of course, I had always in the back of my mind the Middle East. Why? Because in the aftermath of the financial crisis, 2008, 2009, it was a real struggle to actually find a job. Banks, asset manager, investment fund had lost a lot of money. New regulation was being passed. The trading function was being restructured internally. It was really difficult to find a job. And I was thinking one of the few geographical areas that were kind of sparred by this economic meltdown was the Middle East. So I always kept it in the back of my mind, although I never had been to the Middle East before, no family there, I had no actually idea what actually was really the Middle East. So I compiled a list of 250 professionals in an Excel spreadsheet with the name, title, institution, and contact details. And I started emailing, calling, harassing all of them. And I say harassing because it was basically a course against time. It was a race against time, okay? I wasn't making any money in my internship. I wasn't learning what I wanted to learn. I was a failure personally at the job I wanted to do professionally. And I started to feel a bit of shame of having reached that and followed the playbook and still having to ask my parents to make a living. So I did that. Out of the 250 people I have contacted, 245 have politely declined, ignore, send me off, and told me that I had no experience. Probably you guys heard it when you're asking for an opportunity, and we will come back to that later. They'll tell you don't have an experience, that's the chicken and egg stuff. How can I get experience if nobody's giving me a chance, right? So I pursued, but at the end of the day, it's difficult to convince someone who has already his mind set. So the 5 people who actually were curious about my ambition, let's call it motivation at the time, give me a shot, okay? One of them actually told me, if you're really motivated, I'm going to be in Bahrain. I was in London at the time. I'm going to be in Bahrain at this big conference where I'm going to be a speaker. Maybe we can have a coffee there. Thinking, okay, expenses, more expenses. Okay, I'm going to go now to Bahrain in order to have one coffee with a guy who may or may not give me a chance. Okay, but at the end of the day, that's the price you have to pay. So I reached there, and I'll never forget, I managed to get a room in a shitty hotel. That's fine, okay. And in my suitcase, so I packed a suit, okay. And basically the other 20 kilos that I had in my suitcase were my CFA books. I brought my CFA books with me because I'm thinking, okay, I need to be able to work. I'm not going to attend any of the session of the conference, but I need to learn about all these theories and discount cash flow and all that, you know, the accounting that we've seen in level 1, and I had just passed the level 2. So like, okay, I'm ready. The guy is messaging me, let's go into the lobby and have a coffee. So I'm going there, and he's asking me, okay, so now you're in London, you work in this company. Okay, so he was the head of the trading of a large Abu Dhabi-based bank. And he's thinking, okay, but have you done a bit of trading? I mean, I understand, I see in your CV you haven't had a trading experience per se, but have you done a bit of trading yourself? I'm thinking, oh shit, man, what am I gonna tell this guy? That, you know, I've tried, but I failed, and I'm like, well, what do I have to lose anyway? So I told him. And for 10 minutes, we discussed about my failed trades and why. And I explained, okay, this is what I did, and the reason, and why I did that, and the position I take, why did I sell that? This is what guys want to hear at the end of the day. This is what they wanted to hear. And that's what I realized after is there is always a way to create yourself a bit of experience. Even if you think it has to go through the traditional way, as internship or apprenticeship, but there is always a way to show to the people that you want to work for, that you want to work with, that you have a bit of skin in the game. And that's what he liked. He said, okay, so you do have a bit of experience in trading. I'm like, yeah, I have a bit of experience in trading, not a very successful one, but yeah, I've tried, I understand the psychology, I understand what I'm missing to some extent. I know that there are things that I don't know, and yeah, I'm willing to learn. It's like, okay, cool, let me get back to you. And he got back to me 6 months after that. And every week I was harassing him. Every single week. So the conference was in May 2010 until December 2010. Every single week I told him. What did I tell him? I told him what I was thinking of the market. I was telling him what kind of trades I was doing. I told him why I was still motivated and why I still wanted this job. In mid-December, this guy called me and said, Mehdi, I'm sorry. Yeah, you were, definitely one of the top candidates, but we decided to go with someone who actually have experience in the region. The only thing I didn't have. Okay, that's fair. But try to keep face, but I was devastated. It was a blow. I'm thinking, okay, clearly I did something right. I did something, thing that I still need to work on. Let's continue the fight. That was mid-December. The 27th December 2010, this guy called me back, and he said, "Are you still interested in the job?" I'm like, "What's happening? What's wrong?" He says, well, after careful deliberation, yes, this other candidate kind of, she's from Bahrain and yeah, she has experience in the region, but at the end of the day, I'm not sure she's going to be the actual candidate I need to actually build my team. So if you still want the work, I'll never forget, when he said that, if you still want the job, I screamed, yeah, I want the job, I don't want any salary, I just want to work. He's like, no, you're going to have the job. And he started talking, and I could not hear a word he was saying. In my mind, I was thinking, okay, finally, the chance has come. So it started in 2010, end of 2010, early 2000, January 2011. And I was hired as a junior trader, trading fixed income, so bonds, and regional equities. We were trading the capital of the bank because, as I said, the Middle East was one of the few regions sparred by the economic meltdown of 2008-2009, and they weren't prone to the same regulation. So banks still have prop trading desk, which this guy was actually setting up. So I joined his team from early 2011, 5 years until 2016. Those were extraordinary years. It was quantitative easing. We were growing the desk. We had more and more capital from the bank. And we had a great relationship, human relationship, and I learned from him. I learned that when you are in the trading side, and this is one of the reasons why I was losing a lot of money, it's not because of a lack of information. It's not because I wasn't smart or no. It was because I failed to understand that the market anticipates the economy. The market anticipates the economy. The market doesn't react to what's happening now. The market anticipates what's going to happen 6 months down the line. And that is what I failed to understand. I was thinking, okay, whenever there is employment, job reports, or GDP, and all these kind of macroeconomic measures, this was the time to trade. No, it wasn't the time to trade. The trade should have done 6 months before, and now it was time to move on to something else. Number one. Number two, it taught me that emotions in trading have to be regulated by the process. We're humans, we are not robots, okay? We're all prone to emotion, and emotions are, to some extent, are good. But they have to be regulated, framed by the process. And the process will dictate when it's time for you to enter a position, to keep a position, to add to a position, to cut a position. This is the process that you are going to follow and not change your mind. When you enter a position, you are not married to a position. It's an asset that you should be ready to dispose when your theory and your process say so. We don't care about what you feel, what you think, what is your mood of the day. It doesn't matter. Okay, the market is always right. So when the market proves that it's time for you to exit, and the process says it's time for you to exit, exit it. I don't care if the position keeps going 5-10% higher. It doesn't matter. We need to have discipline, and this is how emotions are kept in check. Those are the two main lessons that I learned from trading. So I started again trading for myself, and the outcomes were different. I started making consistent money, and decided to, there was probably the youth, la fougue de la jeunesse, thinking, okay, let me stop trading now and set up my own business. So I stopped trading and finance in 2016 to set up in Dubai my food tech company. I decided to see finance through the lens of entrepreneurial acumen and understand what it is to run a business, to operate, to grow customer base, to retain customers, to develop profit margin. I did that for 2 years, 2016 and 2018, and then I came back to finance after selling the company. I came back to finance to the brokerage side. We're going to come back to what it is to be a broker later. I did brokerage for 5 years until early this year. And when I met our dear Marilyn, when I was at the end of my broker journey, because I had worked for 2 years prior to that in order to come back to the buy side. Broker is an interesting work. It's a very, very, very lucrative work when it's done right, with the right skills, but it wasn't for me. So after, again, years of perseverance, networking, and hard work, I was given the opportunity of joining an asset management firm, where today I'm a portfolio manager of close to $1 billion, managing fixed income, emerging market fixed income, with a focus on Middle East and North Africa, but we trade also South America, Eastern Europe, and Asia, and Sub-Saharan Africa. And it's an outstanding opportunity. So, do you guys have any questions? Yes?
Where did you work in brokerage?
So in brokerage, the last company I worked as was BGC. Yeah. So, good question. So let's dive into the different type of work in the financial markets. So let's break it down in two categories. You have the sell side and you have the buy side. Okay. So the sell side typically are investment banks, are brokerage firms. Okay. Within investment bank, you have the traders, you have the sales guys. In brokerage, you have, by definition, you have the brokers. Okay. And by show of hand, do anybody know actually what does a trader in an investment bank now? In a European or American investment bank? Any idea? Kola, you want to try? Okay. No? Okay. So, post 2008, after the new regulation, the traders are kind of limited in deploying the actual capital of the bank because of capital regulation and all this kind of laws. So now a trader in an investment bank typically has a responsibility. Responsibility is what? The responsibility is to make short-term profit for the banks that employs him. Very simple, okay? He's given a desk, he's given a mandate, which is you're going to trade emerging market bonds of these geographies, okay? And we expect you to make money. This is your budget. Budget is not like in French. Budget is basically your financial target, your financial objectives. And you have a year, okay? You have salespeople to help you. You have research people to help you, okay? So how does he do that? Twofold. He should be able to predict and anticipate the direction of the market, but that's only one side of the coin. The other, because he cannot deploy now the capital of the bank anymore. The most important thing, he should be able to anticipate what his client of the buy side, are willing to do, are willing to invest in. This is his predominant and most important responsibility. Why? Because basically he's being given, let's say, a limit of $100 million. And he would think, okay, this is the macroeconomic situation now, this is the geopolitical situation now, this is how I anticipate the market to go in the next 6 weeks. Okay. Now, I think that my clients will be interested in either buying this type of securities, selling this type of securities. Okay. So I will anticipate what they are interested in buying. I will build it in my inventory, in my book, we call it, my portfolio, okay, in order to be the most competitive when the clients come and he wants to buy something from me. This is the responsibility of a trader. The client come through the sales lady or the salesman and say, okay, I want to buy this security for $50 million, make me a market, okay? So the sales is turning to the trader, and trader, if he has been spot on, think, great, I was right. This is where the market is going. This is what this client wants to do. I have it, okay? So I'll be able to offer him at a good price. And the difference between the price at which he has purchased it a few days before or the same day and the price at which he's selling is where he's making his margin. So this is what a trader nowadays in an investment bank is doing, okay? Anticipating, building some inventory, anticipating the clients to come, selling back to the client. The sales team, because we understand, because this is the sales side, the client is the architecture of the business. So the sales team has to be able to anticipate, understand the investment requirement of each of the client of the bank in order to give information to the traders. This guy is making money. This guy is feeling good. This guy is trading more and more capital. This guy is focused on this particular region. This guy is focused on this particular security. Okay, this guy is looking at this macroeconomic indicator. Great. Giving the trader information in order, again, to anticipate what the client wants to do and make profit of it. So this is the sell side. Now you have the buy side. So as the name indicates, the buy side are the financial institutions that have the capital and have the, I'm sorry, I just realized. I forgot to delve into brokerage on the sell side. So the brokers are financial intermediaries. They do not take any positions. They are here to match a buyer and a seller and take a commission when they cross the price, okay? So typically they need to find a seller in order to get a security and sell it to a buyer immediately on the spot. I said earlier that brokerage is probably one of the most lucrative profession in the game, yes. Because typically in a brokerage firm, the deal you have with your company is you take 50% of the commission you make for your institutions. Yeah. And it depends on the instrument, exactly. So it can range from 30, 40, but typically it's 50%. So the successful brokers typically have a product that they're specialized in, a geography they're specialized in, type of client they're specialized in. So it can be a kind of unfair world because you can be assigned to a team where the base commission can be 5,000 euro. So each time you trade, you're making for your own pocket 2,500 euro each time. So if you're trading 10 times, it's 25 grand at the end of the day for your pocket. Some other commission can be a few hundreds euros, right? So for you to make a decent living, you need to be able to have a lot of clients who are investing in one of our strategies and telling, okay, depending on your strategy, this is what we expect as a return, and we will give you our money for 1 year, 2 years, 5 years, depending of the mandate, and expect you to perform. To understand at any given time if the positioning of my portfolio, depending on my strategy, is suited, number one, for the interest of my client, transcribed by investment guidelines that we have signed when they have given me their money, and where I see the market evolve in order for me to outperform the market. So this is basically the mandate of an asset manager. Hedge fund is a bit different because people often confuse both hedge fund and asset management. To make it simple, an asset management is expected to outperform or to perform in line with a specific market. And a hedge fund is supposed to not only outperform, but is supposed to provide returns that are decorrelated from the market. This is very important to understand that. Sometimes we hear criticism of hedge funds saying, well, the CAC 40 or the S&P 500 returned 6% this year, and the hedge fund only returned 2%. So why am I going to give $100 million to a hedge fund guy who's going to take 2% management fees, where I could have gone into a S&P ETF and make 5%? Well, the reason why people do that is because when the market turns, you expect the hedge fund to, because it's uncorrelated with the market, to deliver 2-3% when the market does -3, -4%. So a hedge fund typically will tell you, okay, they have sometime a lockup period when they say, okay, you give us your money, but you will not be able to take it out for a year, 2 years, 3 years, okay? Depending of the hedge fund and depending of the strategy, in order for them to navigate the cycle. For us, again, as asset manager, it's different. Our clients saying, okay, this year we anticipate that the MENA bond market are going to, outperform in comparison with other bond market. We are bullish on this subsection of financial markets. Who are the best asset manager who can provide me with outperforming, with return outperforming a market in which I'm already bullish? They go to publication or returns are public, and they are shortlisting 5 to 10 asset managers, and then we're taking interviews, okay? What is your investment strategy, past returns, why did we position ourselves this way, that way, and the other way? And when we sign, they wire us the money, and they will monitor on a monthly basis saying, okay, this is what the market has done. Can you send me a snapshot of our portfolio and explain why did you invest here, why did you invest there? And typically our fees are substantially lower than hedge fund because asset managers usually are slightly less active than hedge fund and manage bigger size on aggregate. So this is for the financial market type of buy side, and then you have the corporate side of buy side represented by private equity and venture capital, which invest in companies at different stage of their life. Venture capital, as you guys know, early stage. Private equity at a later stage for an exit within 3 to 5 years. Any questions?
10 minutes.
Okay. So I'll give you 10 minutes. I'll give you the choice. You want to talk about the Middle East? Okay. Sorry, guys.
Except if there are questions and you don't.
Do you want to talk about career? Do you want to talk? Tell me, what are you guys are interested to know, to ask?
Okay.
I tried.
Okay.
Okay, so we have the tendency in France or in Europe to see the Middle East as a block. Okay, the Middle East is extremely diverse. We cannot talk just randomly about the Middle East. So in the Middle East, you have subsection. You have the GCC. A friend here is very familiar with the countries of the GCC, which are Saudi Arabia, which are the United Arab Emirates, which is Kuwait, Qatar, Bahrain, and Oman. 6 countries. So those countries created, I would say, this union in order to align their interests. Why align their interests? Because they are hydrocarbons producers. They have similar political regime structures. They have same ethnicity, and they also have the same religion, I would say, predominantly. So those guys, although within these 6 countries you have different groups, but basically those guys are defining how the oil production, the relationship with the West, with Europe, with the United States, with Asia as well, the relationship with the region, Iran, Israel, and other neighbors are conducted. That was the prime reason why the GCC was formed on an union basis. Within the GCC, you have the Saudi Arabia, United Arab Emirates, Kuwait, and Qatar, which are extremely, I would say, strong economy, small economy in relationship with developed market, but still fast-growing economies that are still dependent on oil, but are on a quest to diversify their economies through foreign direct investment, huge infrastructure projects, and so on and so forth. And you have Oman and Bahrain, who are, I would say, for the case of Bahrain, dependent more on Saudi Arabia in order to thrive because of the political situation over there. Also, oil exporter. And Oman, which is, I would say, we don't hear so much about Oman. It's a quiet country, but it's a country that really promotes internal development for Omani population, private investments, and fiscal discipline. So it's really a country with an interesting story and a bright future. Then you have the Arab non-GCC country in the Middle East: Jordan, Iraq, Egypt, and the non-Arab being Turkey and Iran. So Jordan is a monarchy, parliamentary monarchy, quite stable. The king is quite open to the West. Himself, he's half British, and also managed to get great relationship with the West, as well as North Africa, as well as the GCC. So Jordan is usually a great country, when the West want to understand what's happening in the market, they talk with Jordan, and Jordan kind of make the liaison with the region. Then we have Iraq. Iraq, of course, since unfortunately 2003, has been going through some difficult times, but Iraq has benefited the past 2 years of high oil prices and have huge foreign currency reserved, but kind of political instability because of the different sects within the country that are unfortunately fighting each other. And then you have Iran. So Iran is kind of a pariah in the region, although we understand that historically speaking, it's a country with a big weight, and we don't exclude the fact maybe with the next US administration that Iran might come back to the scene, but so far it's kind of isolated. And when we have Turkey, that I think everybody's familiar with, that is a company that has, a country that has modernized itself in the past 10 years, and although maintaining kind of I would say traditional value and sense, is modernizing its economy at a very, very rapid pace. So those are the countries we, as asset manager, invest in on the sovereign level, but also in their companies. And we always have to keep the story of this company updated. We need to this company, for God's sake, of those countries. So understanding what is the interest of Saudi Arabia, what is the interest of United Arab Emirates, are they aligned? How is Bahrain managing its internal population challenges? Is Saudi Arabia still going to provide support to Bahrain? What is Oman's strategy? What about Egypt in the light of the recent geopolitical unfortunate events, war, to call it as it is? Is Egypt going to be more on Palestinian side or Israeli or not? Because Egypt has a history of being involved in geopolitical in the past 60 years. So it's important, is Egypt going to be drawn into this conflict or not? If yes, then we need to act accordingly and reduce our exposure to Egypt and follow how the president is going to navigate this crisis. Then we look at Jordan. Is Jordan still the peacemaker? Is Jordan still in great relationship with the international institution that help the country get finances, that help the country strive? If it's the case, then we remain well invested in Jordan. Same thing all around the Middle East. So that's why it's important when we talk about the Middle East to understand that it's not a simple block. When I invest in the Middle East, I actually invest in subsection of each country, understanding the strengths of each sector, each company at the sovereign level, how they manage their debt, how they manage their finances, how the population is evolving, and trying to provide the best risk-adjusted return for my client. Yes?
As it's really geopolitical, how do you manage if there is a brutal change, not like a war, but let's say if a ruler died, and I don't know, his uncle or brother rules the country and has a different politic that is not the one you anticipated. How do you manage?
Excellent question. So, unless it's an assassination, okay, but usually there is always, when a ruler gets old and sick, and basically what's happening in Saudi Arabia, for example, okay? So the actual king, King Salman, okay, is quite old, is still there, okay? But we clearly see that his son, the Crown Prince Mohammed bin Salman, is actually the one ruling the country, okay? So we already know that there is a transition plan in place, okay? It was the same thing in the UAE, where the actual president, the Sheikh Khalifa, who died last year, basically had been feeling unwell for a few years. We already know there is a transition plan in place. So we're already looking in the line of succession. What are they doing? They're already getting involved. What is their policy? How do they react to the private sectors, to the expat population, to the geopolitical situation? And if we don't like changes. Okay, so sudden changes. So if it's a change that we can navigate and see that it will not have an impact, financial impact, even though politically it can be a change, but there won't be any impact, then we're comfortable with it. As soon as we can't answer this question, think, okay, how this guy will address the deficits, the relationship with its neighbor, his private population, his internal population, then without selling our position, but we reduce our exposure gradually and we assess, we monitor. We travel to the country. We talk to foreign officials. We talk to central bankers. We talk to ministry. We meet them in conferences, and you have off-the-record conversation. That's how you drain and you get all the insight, the real insight, not in reports, okay? And the sell side is supposed to provide us with this information as well, right? Since they are the one trying to do business with the buy side, they should be the one saying, okay, have you followed what's happening lately in Iraq? There is election coming up. There is a pipeline issue between Kurdistan, Turkey, and Iraq, okay? There is negotiation going on. If it's going the right way, then this is the outcome. If Turkey doesn't help, it's going this way. So then we analyze all the situation, the odds, and thinking what is the best course of action in order for me not to make money, but to not lose money. This is really, really an important fundamental. It's easier, more important, I would say, to not lose money than to actually try to make money, okay? So we have a range of scenarios, okay? At work, I have a spreadsheet with a range of sometimes improbable scenario. What is oil go negative, like it did in 2020? In 2020, oil for few days was negative during COVID. I know it doesn't make a lot of sense, but it happened, So without going to this extreme, if oil is at 20, what impact it has on Saudi Arabia with all their expenses and projects? What impact it has on Bahrain, who's a more fragile kingdom who relies on the help of Saudi Arabia and their oil money to help them thrive and maintain peace in the country? What happens as on country importing oil, okay? So we have this range of scenarios where we know what we have to do in all of those cases. So my job is to anticipate as much wide and improbable scenario as possible, and not only think, what if the Fed raised the rate for 25 basis points? We don't care about that. I mean, we care, but it's not meaningful for us, okay? What if inflation go back to 8% because there is another war and oil go to $200? And it can happen like that. Russian decided to go hardball even more. Iran decided to join the Middle Eastern party, and then suddenly oil is at 200. What impact it has on country importing it? What impact it has on neighbors, So this is the way we are trying to process information and never be surprised.